Good morning, everybody. Good morning, good morning. It is Monday, July the 3rd. It is 7 a.m. New York time. And here we go. We're back at it. 10K to $2 million funding challenge. We are taking $10,000 in funding and we are running this thing up to 2 million, hopefully by the end of this year. So, glad you guys are here. Hope you had a great weekend. Hope it was restful. Hope you got out, got away from the charts. But it is good to be back. It's always good to be back watching price get delivered. So welcome in, everybody. Good to see you guys here. Mr. Brooks, Michael, John, Ghost, David, Adrian. You guys are all welcome here. It's good to see you guys back. Thank you so much for being here. I do appreciate you guys being here and watching the stream, and I hope it's helpful for you. I really do. I can remember so clearly what it was like not being able to pass these challenges, the frustration and the anger and anxiety and depression that would come from failing over and over and over and thinking you'd find your edge and then not having it play out and then breaking your rules and making new rules. I mean, just all of it was just so incredibly frustrating. So that's why I started this stream, is just to help other guys who were where I was just a year and a half, 2 years ago. And it is possible to do this. So I'm glad you're here. Don't quit. Don't give up. We'll get there together, I promise. So anyway, I'm glad you guys are here. How was your weekends? Let me know in the chat. I'd love to know if you did anything fun or exciting. How did your trading week go last week? We had kind of a short week last week. I was up at my church's student camp helping them, so we didn't get to sit on the stream too long, but ended up finally getting a trade set up last week. Took the loss, keeping our streak alive of starting with a loss every single time we start one of these challenges. Great. Last week was break even. It's a great week, man. You protected your capital. Not every week you're going to make profits. So that's just the way it is. That's just the way it is. We have taken one trade last week. We sat around, we watched, we waited. Our setup just wasn't there. But we do have an interesting setup happening here on Euro Dollar. Potentially, we've ran buy side or sell side liquidity here. We've run back down into this. A lot of these imbalances over here from last week's big push up on Friday. Ran liquidity, and now we're displacing higher here, and so it actually just kind of dipped back down into that little fair value gap. So here you had this run up that then came back down. This little up candle initiated this run down into this sell side liquidity here. We've had displacement away, and this is a really nice looking breaker right here. And you can see it is, let me get to it. This is a nice little setup. I don't know that it's going to actually work out perfectly, but not bad. Here you go. Just to start off the morning. Again, it's Monday, and I don't just jump into a trade the first thing on Monday mornings, but this is really not a bad looking setup right here. You've got your up candle. It ran sell side liquidity here, and then we've displaced back through it. It left behind a fair value gap inside that breaker right there. Really a nice looking opportunity. If it wasn't Monday and it wasn't 7 a.m. and I'm just now getting on the stream and I'm still kind of waking up and shaking the cobwebs out of my head, that may have been the trade for the day right there. Maybe. Good morning, Deadpool. Welcome in, sir. Anybody do anything crazy or out of the ordinary this weekend? I'd love to hear about it. I did nothing. I was still at the camp until Saturday. Got back. We left Saturday night. Got back. Really didn't do much yesterday. Just kind of recovered, chilled out with the wife, walked the dogs, hung out with one of my boys, the one that lives here close by. That's about it. And now we're back at it. Today, it's a weird week. So, hey, somebody got a payout. David, way to go, buddy. Way to go. Good job paying yourself. Good job paying yourself. That's the way to do it. What was I talking about? Oh yeah, this week. So you got July 4th, which is a massive, it's national holiday here in the States. The banks will be closed. You've got red folder news every single day. In fact, let's go ahead and take up and pull up what our red folder news is going to look like here. I'm going to have to minimize that. Hold on. Bear with me. So here we go. Today at 10 o'clock, we've got ISM, manufacturing PMI coming out. This is one that it's not on my red folder list of untradeable. So if we find a position before we get into this trade, I will take it. Tomorrow, however, is a bank holiday. So no trading. In fact, I'm not going to stream tomorrow. I'm going to take the day off. It is not a day for me. I need a break after last week. I'm still kind of wiped out, and it's a bank holiday. There's really not going to be much happening, I don't think. And even if there is, you just don't need to trade every day. And so I told my wife I'm not going to stream tomorrow, so I'll make sure to tweet that out. It's actually scheduled on YouTube all week. So today it's scheduled, not tomorrow, and then Wednesday, Thursday, Friday we'll be back on the stream. But no stream tomorrow. I'm just going to enjoy the holiday with everybody else. And then on Wednesday, you've got FOMC meeting minutes are coming out in the afternoon. So, it's just everybody's going to be waiting to see what are they talking about? What do they think? Are they still going to be are they still holding to their ground about bringing in more rate hikes this month or next? And so that'll be interesting to see. And then Thursday, you've got the non-farm employment change. You've got more ISM PMI jolts coming out. And then, of course, on Friday, you've got the pound has some red folder news on Friday, but then the actual NFP, non-farm employment change, the big day is going to be Friday. So a lot of potential to bring in some volatility and kind of carve out a nice little range here for the month of July. So we're just going to have to watch and wait and see. But today, if we get a setup, we'll take it. We may have just gotten it. We may have just had that opportunity come to us. It was a nice little run on liquidity here. We had displacement up, fair value gap. It dipped right into that fair value gap, and now it's running away. So we'll watch that. Maybe we'll get something on pound. If not pound, maybe we'll get something on gold here. We've run sell side liquidity here on gold, and so we're going to look for some displacement. That's about all I see. I had Euro Pound up here. Euro Pound is, golly, I can't stop yawning. Oh, it's kind of starting to pull up out of its range. It's either going to be reaching into this buy side to fall away, or it's going to displace higher. And somebody last week was looking at Euro Pound and got chopped up in a trade. I think it was up here. Somebody got chopped up last week. So I don't need that up here, but US 30, you can see big opening gap. It's traded back down through there, and it's still kind of just now inside the opening gap that it left from Friday's close to Sunday's open. So it's just sitting around in there. We'll watch and wait and see if there's some kind of movement, a little run on liquidity, a Judas swing, whatever. It has run buy side. I would think, oh my gosh, I would think it's probably these sell side targets here could be a nice little dig into that if it wants to run higher. So we'll watch and see what happens there. Man, that was just a nice little setup. Too bad it was Monday morning here. It just is not my cup of tea to open the charts and immediately place a trade. I would have done a 7-pip bare minimum. 7 pips is my kind of bare minimum. But that is basically smash and take profit already. Anybody see that? Anybody take that? It wasn't waiting on me. Anshu already entered EU at 0870. Is that right? Oh no, you entered. Down here on this dip. Nice catch if you made that. That is not part of the system that we use here on the stream. Why can't we look for trades on cross pairs during Mondays? You can. You absolutely can, David. There is nothing keeping you from doing that if it comes back. Potentially, John, potentially. Hey, Beeswax, welcome in. Yeah, there. You can look at any pairs you want. Oh, for me on this stream, these are the pairs that I trade. I'm not going to change my system and change my strategy and change the pairs that I watch and trade just because things aren't happening the way that I want them to, or because I just need to find a trade. I know my system on these pairs over the course of 100 trades, and I know that given the next 4 to 5 months, I'm going to be very profitable, and I don't need to take a trade every day. So if you want to look at other pairs, you can. Absolutely. I'm just not going to do that here on this stream. I will, if there's a pair that you want me to look at and analyze or just give you my opinion on, I'm more than happy to do that. But it's definitely not something that I'm going to call trades out on for this stream or for my strategy here, trying to get to 2 million in funding. I don't trade pairs, but I have traded 60, which seems to be the same. Oh, the future side of that, yeah. Mr. Brooks and Shu Gal, where are you from, buddy? So anyway, that's kind of what we're looking at. We might get something here on pound, potentially, if it wants to make a sympathetic move up with the euro dollar and run a little bit higher. It could we could be seeing a potential move on pound, but we'll just watch and wait. Euro, if it comes back, I would be. So the interesting thing about euro is this is the breaker we identified from last week. This was on Thursday. We were hoping that it wouldn't have run this. This is the day we took the loss on gold. I was really hoping that euro or pound would not have run out its sell side liquidity here, but this breaker did end up coming back on Friday, tapping into that breaker, tapping into this big fair value gap here, and it has since respected it multiple times here. Someone in here talked about Europound the other day in here, and I looked at it, but man, the higher time frame is so ugly to me. I don't know how you guys analyze it. Yeah, Europound always seems choppy to me. Every time I've opened it up too, I feel like it's looked very choppy to me. But I mean, if you know the pair and you have a plan for it and you have a strategy for it, and it fits your if it fits your strategy, I mean, everybody's gonna have their pairs. Anyway, this breaker here held last Friday, fell back away. Would be interested to see what comes up of here. Overnight in London, we had a nice little run on liquidity here. We've displaced through. This run on liquidity started with. Let me jump up here. Let me look at this. So this run on liquidity started here, and then you had displacement away. It's pulling back up. Here is a 1 hour breaker right here. Excuse me. These down close candles initiated this run on liquidity, and then we had displacement away throughout the London session, and now we're pulling back up into this hourly breaker right here. So if Euro wants to continue to move higher, it's going to have to violate these fair value gaps, this breaker block right here. You can see it, this down close candle initiated this run on liquidity, displacement away. Egan caught short there this morning, just took 1% off the table, given all that's going on this week. That's a nice little catch. Depending on where you got in, I'm trying to see. There really wasn't an entry here to catch this short on a breaker. There was no pullback here, no pullback here. It just completely fell away. But it did run that liquidity there. Targeted sell side, took it out, has rebalanced some of this price action down here. And now we're returning up into this London area here. But here is your this move up started right here on these candles. And you got two fair value gaps it's tapping into here. So we'll be watching that. So you have a breaker here that's running up into a breaker coming down. So it's like, where do you want to go? I'm gonna be patient here and watch and wait. Again, I'm in no rush to try to make up for that loss from last week. I'm in no rush to get out of drawdown. I'm in no rush to take a trade. I come in here every day just expecting to do nothing, really. Brad, what's your favorite book? Well, that's a big question. If you're talking about trading, currently my favorite book is Best Loser Wins. It is so good talking about the psychology just behind your emotions, and there's a lot of it in there that doesn't apply to me. It's about this guy's specific way he thinks about risk and how he manages his trades and positions and so forth. And there's a lot of that in there that is just not useful to me. But the stuff in Best Loser Wins that is about psychology, that's about dealing with pain, that's about dealing with losing and taking losses. It is probably one of the best books I've read that was most helpful for me to understand and get to a place where um, I could deal with taking a loss, and I could deal with being in drawdown, and I could deal with the pain that you feel when you come into the markets, the pain that you immediately feel on Monday when you open the charts and you're like, oh, there's a setup, I'm going to take it. Oh, I need to be in the trade. Oh, I just missed out on that move. I could have had potential profits. I just could have made my drawdown back. Whatever it is, like, you have immediate pain every time you come to the markets. And that book was super helpful for me. Best Loser Wins is it's a great book. Great book. 48 Laws of Power. I have not read 48 Laws of Power. I have seen it. I've heard some people say some good things about it, but that's about all I know of it. Let's jump over here to the dollar. We'll do some higher time frame analysis here since it's Monday, and we'll talk through what happened last week. We were expecting this fair value gap to be our draw on liquidity. It did reach up into that. It reached down into this fair value gap and respected it. So this fair value gap was traded through right here, came back up, respected it, traded up through and violated it. And this fair value gap, again, we talked about this on the stream last week. This fair value gap now becomes inverted, meaning if we were expecting it to act as resistance, once it's traded through, we can expect PD arrays, in this case, a fair value gap, to be inverted and respect the other way, the opposite way. And it did, in fact. It created another fair value gap inside of a fair value gap. And both of those then acted as support here and pushed price higher. We reached up into our weekly fair value gap. The daily candles did pop above that fair value gap, but the weekly closed and respected it pretty aggressively. And now here today, we've already reached back up into that weekly fair value gap again. So on the weekly time frame, I feel like I'm more bearish still, but on the daily time frame, I'm slightly more bullish. So with that in mind, you just have to be adaptable and cautious, and we will just watch and wait and see what the dollar wants to do here. But it's still the same until it shows us that it does not want to respect this weekly fair value gap. I would remain bearish here overall, and you still have these fair value gaps just below you that could hold price up. So something's going to happen. I don't know what, but something's going to happen, and we'll just watch and wait, and we will try to prepare ourselves and put ourselves in a position to take a shot when our setup appears. Good morning, guys. David, welcome in. Huntsman, the Sharp, good morning. Glad you guys are here. So why aren't we trying to short off that 1 hour breaker? On Euro? Mostly because we've been bullish here, John. Like we had a change of structure. We had a big run up. I was expecting Euro, if it wants to run higher, it's going to need to pull back down and rebalance some of this. You can see on the 4 hour time frame, it needs to rebalance, and it did. It pulled back down into this order block right here overnight, and now it's pulling back up. It could run. We took out sell side liquidity last week, and then we pushed back up higher. So it's some of my higher time frame bias is that I think Euro dollar is going to be bullish here. And so I'm not going to take a counter trend trade here. It needed to rebalance some of this. It's done that. And now it could just consolidate. It could pull off of here and dig deeper. I'm just not going. Number one, and I say this every single Monday. Monday's my least profitable day. And if I wasn't doing this live stream, I wouldn't even be at the charts. So I'm not just coming into Monday and sitting down first thing 15 minutes into a trading session and trying to find a trade. So I do like to identify what price is doing and read tape basically and talk through why it might be reacting at certain levels. But currently I'm not just trying to find a trade. Now, if something else, if we get another run on liquidity, we come back down here, we take out this low, we get some more displacement. Uh, I'm gonna be I'm gonna be more inclined, but just right now, first thing, 20 minutes into our stream here, I'm not gonna just try to short anything or go long on anything. So the first thing I saw when I sat down was this run on liquidity here and displacement fair value gap. That's the first thing I saw. And then as I looked up above it, I realized if price is going to stall out, why would it stall out? Well, you have fair value gaps. It's going to if it's going to respect bearish price action, it needs to respect these fair value gaps, these order blocks, this breaker block. All of this could send price tumbling back down lower. But I'm more inclined to think that we're going to be bullish. But I don't know. Again, I always enter Mondays probably the most neutral of positions. It's the start of a new week. It's the start of a new month. It's the start of a new quarter. You have a bank holiday coming out. You've got red folder news all week. All of those things for me when I come into this session today is just be very cautious. Don't be in a rush. There's absolutely no need to try to just jump into a trade right away. It's a 4-hour DT. I'm trying to, my brain's not working right now, John. I'm not picking up on what DT is. Downtrend? Is that what DT is? Is downtrend? It's probably what it is. Yeah, there it is. Okay. Uh 4-hour. Well, I don't. It's really more of a consolidation for me, and since it took sell side liquidity here and had such a massive reaction off of sell side liquidity and off of this weekly fair value gap from last week. Oh, just moved that, but you've got a weekly fair value gap here from last week that it tapped into. Took out this sell side liquidity on the 4-hour and rejected pretty heavily off of there. That's why. And on the daily, we're making higher highs, higher lows, higher highs, higher lows. So that's why I'm on the weekly, sorry, and on the daily time frame as well. We've had a change of structure here. We failed to displace and make a new low. We pulled back up, higher high, higher low, consolidated, grabbed sell side liquidity. This is not a change of structure yet. It just grabbed that liquidity and pulled back up. So for me to switch my bias here on Euro, I would need to see some displacement below this low. But right now, it's just, this was the end of the month, end of the week. It was all kinds of chop right there. This weekly fair value gap is what's holding price down. And this weekly fair value gap is what's holding price up. So we're stuck in between these PD arrays currently. In the 4-hour, just rebalanced itself after grabbing liquidity and changing structure. It displaced below this low, grab liquidity, and immediately after you had this run on liquidity, you immediately had displacement. And so this up close 4-hour candle is what ran liquidity, this displacement away. There's your 4-hour breaker on the downside that it tapped into perfectly with that fair value gap. And now it's pushing up higher. So I mean, you can find all kinds of reasons to go short or go long. I just try as best I can to have in my mind what my higher time frame bias is, and then try to align that here lower. Michael is leaning bearish dollar. The dollar is really interesting because I'm bearish dollar long term, like on the weekly time frame. I'm bearish. But on the daily time frame, I'm bullish. So they're a little bit conflicting and kind of a similar situation. You're stuck between a weekly fair value gap here, and you're stuck between these daily fair value gaps down here. And so don't really know a whole lot to sway me one way or the other. I would disagree, John. I don't know that I'm smarter than anybody in this stream. But I'm just speaking from experience in sitting down here trying to figure out right away where things are going. And that's just kind of what I see. So that you can see it's having a nice reaction off of that breaker. I mean, for sure. But it could just stall out right there. It could come back down to this breaker and retest it one more time and shoot back higher. This could be a run on liquidity, and we get a breaker here lower to really rebalance some of this stuff that it's left open here currently. I mean, there's all kinds of scenarios that could play out. But again, always, always, always just be cautious on Mondays, and especially this Monday. Again, first day of the week, first week of the month, first month of the new quarter, bank holidays coming up, red folder news, all of that is just should be just blaring at you. Be cautious, be patient. We have plenty of time is on our side. We are in no time limit challenges. The funded account isn't going anywhere. These challenges aren't going anywhere. We're going to sit and wait, and we're going to be clearly convinced when we see what we need to see. Gold here has reached through sell side liquidity. I would be interested to know what's going to happen with gold here. We had that big run up on Friday, pulled back, rebalanced this area here. So we're just going to chill out. Took off my order. Were you trying to short or were you trying to go long? Don't let me talk you out of anything. I'm not here to try to change your minds. Really what I'm trying to do is get you to convince yourself that you're doing what you need to do. So I don't want to try to talk anybody out of trying to take a trade, but long off that breaker. Oh, I see. Coming as it's coming back down. Akriti Dekal here. Hey, good morning, Rajesh or Akriti, whichever one you want to go by. And welcome into the stream. Glad you're here. Good to see everybody back. I am so appreciative of you guys. So thanks for watching this. It makes doing this so much easier when you guys are here watching and you're active in the chat. So I do really appreciate it. And let me go back to what I was saying. I was talking to John, but I'm really talking to everybody. I'm not here to convince you to take a trade or not to take a trade. I'm really just trying to do this to model what it looks like to sit down to charts every single day and have a game plan. Have a game plan when you sit down that you know exactly how you're going to act when you get to the charts. And for me, my game plan on Mondays, I am the least likely to be aggressive on a Monday or to execute a trade setup on a Monday. I'm just not inclined. I know my data. I tweeted out yesterday, I put up my stats from my last 100 trades. and also all of the stats for since we've started this challenge. My stats since we've started this challenge are actually a little bit better than my last 100 trades. My last 100 trades were like 57%, and currently for the challenge we're at 60% win rate. So we're actually doing a little bit better on the challenge than I actually have been than has been playing out over the last 100. But I have a game plan every single day. I know before I sit down, most likely how I feel about taking a trade that day. And every day is neutral, but Monday is probably the most neutral position that I could be in, that I know I'm probably just going to be reading tape. I'm going to be watching to see how the market responds. I'm going to be looking to see how these candles are forming. All of that stuff happens over the weekends in the news that could have a big impact on Mondays as well. And so I just kind of like to see Monday shake itself out. And really, this week is even more different because tomorrow is a bank holiday here in the States. And so Wednesday could be Monday for the week. So it's like you have kind of like the market starts and then it's like going to pause tomorrow. And then it's going to kick back up on Wednesday and Thursday and Friday, plus all the red folder news. So all of that combined, you just want to be cautious and you don't want to just be jumping in as soon as you see something happen. I took a 120 pip trade on GJ last Friday, down to up. Cool. I don't measure anything by pips. Everything should be measured by your risk reward ratio. That's the only thing that matters. It doesn't matter how many pips you catch. Pips mean nothing. It's all about risk reward ratio. If you could catch 120 pips on GJ and make $50. I could catch a 14 pip trade on Eurodollar and make $5,000. So, which we will end up doing once we have a few of these larger accounts. So it's not about pips. It's always about your risk reward ratio. If you caught 120 pips, but you had a 300 pip stop, you didn't even get a 1-to-1 risk reward ratio. And I'm not saying that to bag on your trade, Akriti. I'm saying that to help you understand. Don't get focused on how many pips you're catching. It's all about risk management and your risk reward ratio. So that's the most important number, is over the last 100 trades, what's your risk reward ratio? And until you know that number, you should be very cautious about how much you're risking in there. Michael, been watching for the past few weeks. A lot of quality information in the streams. Keep up the good work. Thank you, Michael. I appreciate that. I'm glad you're finding it helpful, and I hopefully that we can keep up the good work. I would love to keep up the good work because that means we're going to be passing challenges. That's really what I'm hopeful for. Mizami Ashraf, how much you risk per trade on this challenge? I'll let the chat answer that. I bet there's somebody in there that knows. Oh, chat's slow. It's 2%. Oh, there it is. They got it. And the caveat here, guys, is I risk 2% per trade because I know my stats. I know my data. I know how I trade. I know what my win rate is. I know what my maximum losing streak is over the last 100 trades I've taken. I have all of the information that helps me decide and choose 2% risk per trade. If you don't have that information, you should not be risking 2% per trade. You are committing trading suicide. This business is all about information, and the more information you have, the better decisions you're going to be able to make for your business. It's with any business. You have to have the data. You have to know the data. And for this business, it's win rate. What's your win rate? Over at least 100 trades. And when I say 100 trades, I mean 100 trades in a live market where you have executed your system as to the best of your ability during those 100 trades, where you didn't break your rules, you didn't change your strategy, you stuck to it for 100 trades and you executed it to the best of your ability. Once you have that data, now you can look at the probabilities. Yes, past results are no guarantee of future results. Okay? We all know this. This is trading, things change. But you want to give yourself as much information as possible to know the probability that the future can replicate the past. If you continue to make the same decisions and you continue to execute this strategy, your strategy, what is the probability that the next 100 trades look very similar? They're not going to be identical, but very similar to what just happened over the last 100 trades. Because the market doesn't, the setup is the setup, and it's going to be there. And if you can execute it, then it should have pretty similar results every block of 100 trades. So when you have that information, then you can decide, oh, my win rate is 40%. And my max losing streak was 7 trades. Okay, well, then risking 2% per trade, if your max losing streak is 7 trades out of 100, that's if you risk 2% and you lost 7 in a row, you're down 14%. Well, that's unacceptable to me. I'm not okay with that. But my max losing streak over the last 100 trades is 4 trades in a row. That's the maximum trades I've lost in the last 100 trades. It really lasts like almost 250. I've never lost more than 4 trades in a row. Can it happen? Yes, it can happen. But for the way that I trade and the way I execute, I'm going to assume that the next 100 trades will look very similar. And so if I lose 4 trades in a row, I'm going to be an 8% drawdown, which is still not in violation of any of these accounts. These accounts all have a 10% maximum drawdown. And so I'm not too worried right now. If I lose 4 in a row, then I will adjust my risk to 1%. And that still gives me 2 more trades to recover some of that drawdown at 1%. And I haven't lost. That means I would have to lose 4 in a row at 2%, and then I would have to lose 2 more in a row at 1% each to violate my account. That's 6 trades in a row that I would have to lose. And I haven't lost 6 trades in a row. I can't remember. I would have to go back and look at my stats to see. I mean, it was when I was trading like crap and breaking my rules and changing my strategy. That's probably the last time I lost 6 trades in a row. So that's how I can confidently come in and tell you I'm risking 2% per trade. I get all kinds of people. I've had so many people get into my Twitter DMs and be like, you're over leveraging, you're over risking, you're risking too much. Oh, I'm a 6-figure funded trader and I consistently get payouts and I'm passing challenges and I'm stacking accounts and I'm showing you how to do this. So it's working for me. That's all I can say. It's working for me. Can I blow an account and can I blow a challenge? Absolutely I can. Absolutely I can. But I'm not going to... if I lose 6 trades in a row, then I will reevaluate my risk parameters. Because at that point, I now have a maximum losing streak for my last 100 trades that is different than my previous maximum losing streak. So then I will readjust my risk parameters if I create a new maximum losing streak. I guess that's the best way to say that. So 2% per trade, and that's just kind of how I approach why I use 2% and why you shouldn't use 2% unless you have the same data that shows you that that's okay to do. Pound reaching under some sell side liquidity here. So that's nice to see. If we can get some displacement higher, maybe we can get an opportunity on pound. Gold is just not really doing a whole lot. And US 30 has reached into that sell side liquidity that I told you that it would likely want to target. The next sell side is here, and then you've got some imbalances here on these higher time frames that it might want to reach down into from that big push up Thursday and Friday last week. It just rallied hard all week long here. So it may want to, you may want to have a little pause, a little pullback. Could be in line and in order for US 30 here. It did run buy side liquidity here. It took out some buy side liquidity, and now we're getting some displacement away. So potentially on US 30 here, you've got this liquidity run started right here, and you've got currently, we'll have to wait and see in the next 7 minutes how this candle closes, but you will probably have some kind of fair value gap in here on US 30. So we'll watch. That could potentially be an interesting setup here. You've run liquidity here. You're below the opening gap. It has held. It traded back through it, came up, and now it's falling away from that opening gap. It's run liquidity here, and now we're getting displacement away. So that could potentially be something. We'll wait and see how this 15-minute candle closes. Hey, Sam, good morning. Welcome in. You guys click that like button for me. Lost my train of thought. I was going to say something, and I can't remember what it was. Anyway, dollar, we're just kind of watching the dollar. It's reacting off of that weekly fair value gap up here. The daily is weird. The daily is bullish, but the weekly, I'm more bearish. So I'm just trying to get my handle around what the dollar wants to do here. Mr. Brooks, Brad, now that you are consistent, do you still backtest and collect data? I do not backtest anymore. I know exactly what my trade setups look like. Backtesting is it's important, I think, to really help your eyes to learn what your setup looks like. But here's the danger in there's several dangers with backtesting, several cautions, I guess I should say. One caution is that you go in and you backtest and you get your strategy and you understand what it is you're looking for, the sessions that you're trying to trade in, all that, blah, 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 right? So you go in and you can rapidly, in an hour, you can backtest a year at a time, depending on what time frame you're on. And you can get all of this data. And you can say, oh, this strategy has a 70% win rate. I think I tweeted this out too. You're backtesting, you could have like a 70 or 75% win rate on this strategy. The problem is, and then you go into the live markets and you try to start executing it, and you wonder why you have a 30% win rate when you just back tested this and it has a 75% win rate. Because you cannot replicate live market conditions, the emotional aspect of it, the psychological aspect of it, and the time aspect of it. All of those three things are work against your backtesting data. You can fly through candles. If you're on a 1 hour, if you're testing a 1 hour time frame, you can click through a week's worth of 1 hour candles in about 20 seconds. And you just can't replicate the time that it takes to sit here and watch the candles print. And so you can become very impatient because backtesting is instant gratification. I mean, you can just drop your long or short tool on TradingView. You can put your entry. You can click, 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 winner. Click, 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 loser, loser, winner, winner, winner. And you can just, it's instant gratification on trying to figure it all out. And actual real trading is the antithesis of instant gratification. Like, it is the exact opposite of backtesting speed. It could not be any more slow. And so when you're backtesting, the caution is that it can instill in you this desire to see trades play out quickly, to see setups form quickly, and you just can't replicate the time factor. You also can't replicate the emotional and the psychological factor. Is this an actual trade? Because when you have time to sit here and stare at the charts, your brain can talk you into and out of taking a trade 50 times before setup actually forms. And so you're constantly talking to yourself, oh, is this a trade? I don't know. Is this a setup? Oh, I don't know. Maybe it is a setup. Maybe I should go long. Maybe I should go short. All the things that we kind of already talked about this morning, in fact. And you just can't replicate the emotional, the pain that we talked about last week, the pain that you feel when you come to the markets, the pain to be in a position, the pain to close a trade that's close to your stop loss, the pain that comes from wanting to close a trade that is going to hit your, that's in profits and you're scared you're going to lose those profits. You can't replicate that pain when you're back testing. So it's just, it's a very tricky thing. In the beginning, I think there is real value for it. If you're learning, you're trying to learn how to determine what your setup even looks like. You're trying to determine what sessions it appears in, what time frames in those sessions it appears in, where your entry time frames are, how often does it show up, if you were perfectly executing. So there is some value to it. I don't want to make it sound like that there's not value to it. There is some value to it. But in my opinion, you reach a point where where backtesting can actually cause you more harm than it can produce benefit for you as a trader. So depending on where you're at as a trader, if you're still kind of in that learning process, if you're still trying to even figure out what your edge is and what your strategy is, backtesting can be very useful for that. But just be careful. It can become addicting and it can instill habits in you that are not going to benefit you when you're actually in the live markets. They can actually play against you and be some of the reasons why you continue to struggle in the live markets. So just be very cautious of those thrills that you get, the joy that you feel when you find a strategy and you come out with all this data that shows you, I've got my edge and I've got a 70% winning strategy. Be very, very cautious. Don't believe it. Don't believe it. It's just not going to play out like that in the live markets for you. And then you're going to get mad. You're going to get frustrated. You're going to think, oh, I just need to spend more time back testing. I just need to refine this. I need to change that indicator. I need to change this rule. and then let me go back test that, and you can just kind of get in this cycle, this repetitive cycle of back testing, becoming a professional back tester, basically, and being really good at collecting data. But in the end, the only data that really matters is how you trade in a live market. That's the only data that you should be worried about, is what is my live data telling me? What are the stats off my live trading results? Those are the numbers that you should, that's your bread and butter, that's your air, that's your water, that's all you should be living on, is the stats from your live trading. All right, Adrian, have a good one, man. Do live or demo trading instead. I would say any way that you can do live trading is the best. Whether that's a small funded account with a broker, or whether that's a small 5K challenge, um, it's just so much harder. If you want to learn how to trade, you need to learn what it feels like to be in the live market with real live money on the line. Because if you don't have that, you're just hurting yourself and you're slowing down your progress. Demo trading, paper trading, I mean, cool. Again, there's some benefit to it, but if you want to grow quickly, get in the live market and test your strategy there, because you're going to learn more about yourself, and you're going to learn, but do it in a way that it's not going to, it's kind of that fine line between doing it in a way that's not going to burn you if you blow that account or you lose that challenge. That's why I think these 5K challenges are really good. Even a competition, even a free competition. So most of these firms have monthly competitions. Even something like that is better to me than just demo trading or back testing, because at least there's some kind of skin in the game, so to speak. There's real prizes that can be won. You can win cash prizes. Um, you can win challenges, whatever, and they're free. They don't really cost you anything other than signing up. But you know that you're competing against other people, so there's a little bit of kind of pride involved there. Um, and there is actually, like, you can actually win. So that's probably the demo side of it. It's not a true real account. It's a competition account. It didn't cost you anything, but that's probably the closest thing to a live trading environment that you could do. And every firm offers those every single month. And so that may be a good place to start. But besides that, try to fund a small account, or purchase, if you can, like a 5K challenge. There's firms out there that have 5K challenges in the $30 to $40 range. Start there, you know, and build up your data with that. It will be way more beneficial to you than in the end than demo trading, paper trading, or just sitting on the back testing charts. Again, if you're still learning and you're still trying to figure out what your edge is, back testing can be useful, but there are just some dangers to it. There's some cautions that people don't think about, what it's doing to them emotionally and psychologically. It can build up this false confidence in you when you spend so much time back testing. Hey, Cy, welcome in. John, what are the pros and cons of trading with Top Step or something similar firm versus trading on your own with your own money? Just you can use their money instead of yours. It's their losses, not yours. Um, I think anytime you can leverage other people's money in life, then you come out ahead. It's the same in real estate. If you're an investor, leverage other people's money. You look at, Rich Dad, Poor Dad. That's what he talks about all the time. all these people that are out there getting rich on real estate, it's because they're using other people's money. And these prop firms are allowing you, for a very small upfront investment on your part, to leverage their money. And so, yeah, I mean, the return on investment is just magnitude larger than doing it on your own and trying to flip your own account. So, should you have your own private account? Yes, I think you should be using some profits to fund your own account eventually. I think having your own account, you're always going to be in more control of your own account. These firms could close, they could change rules, they could find some weird clause that you didn't read in the fine print. They can screw you over. So they're useful and they're beneficial, but they should be useful and beneficial in that you should be using them to try to fund your own account. So at some point, you don't have to have prop firms. Use prop firms until they're gone. Use prop firms until they're not useful to you anymore. Onchef says, in my opinion, better to have a small challenge account like 10K in practice, because demo trading entirely different from real trading. Our emotions play a big part in trading, like greed and fear. 100%, buddy. Yep, we're on the same page with that for sure. Aditya Route says, I successfully pass challenges, but on live account, I blow up. Yeah, it's just all mental. It's just a mental roadblock you have. I did the same thing. And it was until I realized that what really helped me was doing kind of what I'm doing right here, where my focus is always on passing a challenge. I'm not worried about the funded account. This small little 10K funded account, it's in the long run, it's important in that I got a payout from it, and now I could buy a 100K challenge and a 10K challenge. So I used this first funded account to get my refund, to get this challenge, then get another payout and buy my 100K. Now I'm just focused on passing challenges. Listen, what really helped me was stop thinking about having a funded account and being a professional funded account trader, and start thinking about, this is the mindset that helped me. I started thinking of myself as a professional challenge passer. If I could be good and become a professional challenge passer, I can just hook up my funded account to my challenges that I'm passing. And I'm going to make money on those. I'm not worried about my funded accounts. I'm worried about passing challenges. If I can be a professional challenge passer, my funded account is going to pay me plenty, because I'm going to be consistently making 5% or 8% all the time. So having a challenge account that you're working and copying to your funded account and just trying to pass that challenge, that definitely helped my mindset. And that's what's going to help us get to where we want to go on this specific challenge. Are you taking trade on this challenge while live stream only? I take trades on the live stream, and anything that I see on the live stream, I call out live here on the stream. But then if I get a setup after the stream is over, I will call it out live on Twitter. So I don't stay here. Most of my streams are a couple hours. Some we might go longer. It just depends on what I have going on for the rest of my morning and day with my wife and life and all that. So I stay on from 7 to 9 every day, typically at least till 9 a.m. New York time, sometimes till about 9:30. And if we get setups here, we call them out live on the stream. And if we don't, I post them on Twitter. I post everything on Twitter anyway. Even if I'm live on the stream, I still post all the trades on Twitter as well. But if we're off the stream, I post everything on Twitter. Every trade I've taken, I post on Twitter. It's up there. You can go back and look through all of my account on Twitter. You can see I've called every trade we've taken on this stream before the trade got triggered. I called it on the live stream if we're here on the live stream as well. So I do both. It all happens here. Deadpool, do you think prop firms will go out of business? I think some will because they're poorly run and they don't understand the business model. But I think the ones that are kind of the titans of the industry currently, if they continue to manage risk well, I think they're going to be around for a while. Regulation could step in at some point, and they're going to see all these businesses making money, and they're going to want to get their piece of the pie or have more control over it at some point. So that could change a little bit, maybe how they function or work or what licensing they might need to continue to operate as a prop firm. But prop firms have existed for a long time. They're just becoming way more prevalent, and people are having way more access to them than they have in times past. So I don't think they're going away anytime soon. But that's why I'm saying take advantage of them while you can. If you're not trying to reach maximum funding with them, then you're doing yourself a disservice. So you should be trying to reach maximum funding with as many firms as you can. Absolutely. My pups are making an early appearance here. For those new to the stream, my doggies like to come down and go to the bathroom. So let me pause real quick and let them out to go do their business. And then give me just a couple minutes. I'll be right back. All right, we're back. All right, let's see. I feel like I know next to nothing about these funded accounts. What are the cons of a prop firm? India says, thank you for your valuable advice. Sure, man. Glad to help. Cons of a prop firm. Well, you are not in control. You have to follow their rules. And so they have drawdown rules, they have trading restrictions. Some of them have leverage restrictions. So you're basically, the cons are is that you're agreeing to trade within their parameters. And if you can do that, then they give you the opportunity to use their funds. Let's see, where did we... So the cons are, sorry, I was just checking another message here. EM Trading, welcome. The cons are if you're not used to, like if you're okay and comfortable with your account going 15% into drawdown, 20% into drawdown, you're not going to be, that's not going to work with prop firms. They have a maximum drawdown daily loss limit. So if you don't have a daily loss limit as part of your trading plan, then that's something that you're going to have to learn and adapt to. They have an overall account drawdown limit. If that's something that you're not comfortable with and part of your trading plan, that's going to be a con. Some of them have consistency rules where you have to, trade a certain percentage. Like if you're consistently taking, 2 lot sizes on your trades, and then suddenly you throw in a 10 lot size on something and you hit a big winner, they're not going to pay you out because it wasn't consistent with the way that you have been trading. So some of them have consistency rules. Not many of them, but some of them do. So anyway, there's just like you're agreeing that you're going to not break their rules. And some of the rules, a lot of the rules are in place to favor and protect the prop firm, not to see the trader succeed. So a lot of these firms have time limits and they have high profit targets to reach. To be able to become a funded trader, you've got to be able to hit certain profit targets within a certain amount of time. That's a horrible rule. It's going to foster this desire to pass quickly. It's going to make you want to take less than ideal setups. It's going to make you want to gamble. If you're starting to run out of time and you're not there yet, or you're in drawdown, you're going to take unnecessary risks, and you're going to fail the challenge, and they're going to keep the fee that you paid to take that challenge. So it's not all butterflies and rainbows and unicorns when you're talking about prop firms. There are definitely downsides that you need to consider. The upsides, in my opinion, drastically outweigh. And if you can take the rules that they have and use them to your advantage, and they fit within your edge in your trading system, then you can leverage their money and manage an account that you never would have been able to otherwise with your own funds, probably. Who is your favorite trader? Me, myself, and I. I don't really have a lot of like hero traders. Oh crap. I forgot to plug my laptop in here on my streaming. Let me grab my. I don't even know where my bag is. I gotta find my power supply here real quick, guys. Where is my power supply? All right, give me one sec. Otherwise, the stream's about to end abruptly. Stand by. we found it. We are not going to die. Okay. That was a close one. My favorite trader. There's a lot of really good traders out there. Probably one of my favorite traders right now. If you don't follow Casper, Jesse, he goes by Casper. I think on Twitter. I think he's got a Twitch stream. I don't think he does. He doesn't stream on YouTube. I think he has a YouTube channel, Casper SMC or something like that. But he is a great trader. In fact, he just put up a video this last weekend, I think, that is very similar to what we're doing here on the live stream. It's not identical, but it's very similar. But Casper, I really like. I really think he's a great trader, and he has a very good ability to simplify a lot of the ICT concepts that people struggle with. But typical Monday here, there's just not a whole lot going on. We're coming into the 8:30 open for the markets, so the New York markets are open here at 8:30, and then we'll get a little bit more something going on. This US 30 trade, we didn't really get a continued displacement down. It's just grabbed liquidity here and rebalanced down into this buy side imbalance there. So that's it's interesting. I'm not calling this as a trade, but this is your breaker block with your fair value gap nested inside of that. We'll see how it responds to that. If we get a move if we get displacement to the upside here, then you're going to be targeting these relative equal highs, last week's high up here. But I could see, because we had such an aggressive move up on Thursday and Friday, I could see a case made to see a little pullback here, a little retracement under these lows and into some of this imbalance down here today or this week sometime. Probably it won't be tomorrow. Hey, Non, welcome in. How do you make money from, let's see, I'll get to you, John. Hold on. How do brokerage commission fees play into these firms? They all have deals with whatever broker they're using for commissions and spreads. And so that's going to be accounted just like you would if you were trading at your regular brokerage. How do you make money from the firm? You make money by trading whatever account size you have. So for instance, on this 10K funded account, they're giving me $10,000 to manage. Any profits that I make off of this $10,000 account, I receive 85% of those profits. They pay to me, and they keep their 15%. So as this account grows and I get larger accounts to manage, any profits that I make trading these accounts, they will split the profits with me. Some of them are up to 90%. Most of them are around 70 to 80% profit split off of the money you make from that firm. Look at dollar Swiss. Is there something specific on dollar Swiss that you want me to look at, Sai? Is there not an 8 cap dollar Swiss? How is there not an 8 cap dollar Swiss? That's really weird. Oh, that's because I put the wrong thing. There we go. I'm an idiot. A setup, maybe. Let's take a look. So I would want to know kind of what my daily bias is here. We've been making lower lows. We grabbed liquidity. We changed structure. Made higher high, higher low, higher high. Now we've broken back down. This gap, this volume, daily volume imbalance is holding price down, but we're reaching back up into it right now. You've been in a massive consolidation for a couple weeks here. Last week you grabbed buy side liquidity and reversed. This week you opened lower and then just have rallied up. So we're in a consolidation. I don't really have a good bias structure here. Long term, it's in a downtrend on the weekly. All right. So dollar Swiss, you've got, again, it grabbed liquidity last week, pulled away, grabbed sell side liquidity here, and have rallied back up. Okay. We've rebalanced this move down from last week's run. Here's your opening gap from Friday to Sunday. And we've just rallied. We've closed all that back in. Okay. A lot of aggressive move up here on the dollar overnight. A lot of gaps. I can't remember the last time I looked at dollar Swiss. It's been years since I think I opened a dollar Swiss chart. So we've grabbed buy side liquidity. We pulled back down. We failed to displace below this low. So the only thing that I see here, if I was bearish, then I would say that we've run buy side liquidity here. And this move up to run all the stops up in here and rebalance this area here, it started on this move right here. So these are your candles right here that started this run on liquidity. Now that you've run liquidity, did you get displacement below here? No, you did not. So currently there's no setup here because we haven't displaced below where that run started. So liquidity run, we ran this high. We took out all the stops that are above here, but we didn't displace. We started to, but then we've stopped. Now, so there's no bearish opportunity here. Now, if you're talking about running sell side, you took out this low, you didn't take out this low, but you could say, okay, we've taken out this low here. If we get displacement above this candle, then you might have an opportunity for a buy. But I don't see a setup on either one of these currently that would fit with the trading system that we're using here on the stream, that I am using here on the stream. Now, I'm not sure what your trading model is. I'm not sure what your strategy is. I don't know what your setups look like. Maybe this fits your system. This does not. Nothing in here fits my system right now on dollar Swiss. Deadpool, I've seen a guy on Twitter making crazy gains with negative risk reward ratio. Negative risk reward ratio. Claims to make 10 to 15% a month and consistently profitable 7 months. Any thoughts? Don't believe everything you see on Twitter. Ask him to put it on a YouTube live stream. That's where you can believe it. You can't fake that. You can fake a lot of stuff on Twitter. I don't understand how you can have a negative risk reward ratio and be profitable. I'm trying to my brain is trying to wrap itself around that idea right now. I don't understand how that can happen. How can you have a negative risk reward ratio? If you're 1-to-1 would mean you're winning one for every risk that you're making. A negative, if you're losing anything less than one from your actual risk, you're not profitable. A negative risk reward ratio. I'd have to go find out. I'd have to go look and see him explain what he means. Maybe it's not a true negative risk reward ratio. I don't know, because I don't understand how you can. Yeah, it doesn't make sense to me. I know guys that have very low risk reward ratios that are profitable. Like I know guys that have like a 1 to 0.5. They're risking 1 to make a 0.5% reward. And they take they're scalpers, they're going to take, 8 to 10 trades a day, and they're not trying to hit 1-to-1. They're consistently just trying to make half of whatever it is they do, and their win rate is like, 75, 80, 85%, and they can pull out profits on those small little chunks. But I don't know how you could ever have a negative and be profitable, because that by itself, by definition, a negative reward is below profit. So maybe I'm not understanding. Maybe I'm just not understanding exactly what that guy's trying to do. Quite famous. I'll have to go look at TFT's YouTube page and see if I can see this quite famous negative risk reward guy. It's kind of fascinating to think about, but you see our weekly fair value gap on dollar is holding price down. Maybe it's like high strike rate and giving space for stop loss. I mean, yeah, I don't know. Let me see if I can. Can a risk reward be negative? I'm trying to see. This is on the Fivers. Let's see how they explain it. I'll pull this up for you guys. We can learn together. The negative risk reward ratio. The conventional wisdom is to do 1 or 2. If you're going to be a seller, you should be much better at retaining break even. As much as we extend targets according to risk, means that we're more likely to stop or lose each trade. This is because the market is always fluctuating, moving up and down. All right, because extending your goal also reduces the accuracy of entry to exit at some point, every trader realizes that if they do simple math and use a negative risk reward ratio, they can increase the entry to target accuracy. The major downside here is generally a very bad payoff. So a negative risk reward means that you're risking 20 to make 1. Okay. So it's just that you have it's instead of risking 1 to make anything more than 1. Okay. So now I'm kind of understanding. Instead of risking 1 to make something more than 1, you're risking a large number to make way less than that same number. Okay, so there's your negative risk reward ratio. Okay, now I'm understanding what they're talking about. You're risking a lot to make a little. That's what they're saying. By negative risk reward ratio, it means you're risking a whole lot to make very little. So if they're just trying to make a 1R, but they're risking 10R, or they're risking 5R or 3R or whatever. Let's say their daily loss limit is 5%, right? So they're going to risk 4% on one trade. And if they make 1%, they're going to close it out. And so they have a negative risk reward ratio. Instead of a 1 to 4, their ratio is 4 to 1. Okay, now I'm understanding what they're talking about. At one point in their learning curve, many traders will realize that if they use higher risk than reward, they will achieve higher accuracy. This is called a negative risk reward ratio and is a very risky game to play. However, many traders like this model because it gives them more successful events. But with these successes come mighty failures. To put that in numbers, this means if you risk 100 pips when you want to profit 10, if you calculate the risk reward, you're working on a negative RR. You're risking 10 pips for every 1 pip that you win. And in terms of accuracy to break even, you'll be winning 90% of the time. You're only going to be losing 10% of the time. But on the flip side, you're only making 10 pips. But when it comes to losing, you're losing a massive amount. You're going to give up. Yeah, that's the downside of negative risk reward. When you lose, you just lost. You wiped out 9 of your winners. It's not efficient. This method gives a lot of false feelings of success. Okay, now I understand what they're talking about. It makes more sense to me now. And yes, there are people that do that. They are, again, they're gonna get in. Let's say they get in instead of, for us, we might be like, hey, I'm gonna get in right. Oops, let me take that backwards. Let's get in long. So let's say here's a fair value gap, and we would be like, hey, I'm gonna target here, and I'm gonna go for a 1 to 2, and that's gonna win for me 50 to 60% of the time. I'm gonna win twice as much as I lose. And theirs is the exact opposite. They're gonna be like, I'm gonna risk this, and I'm gonna try to make that. So they're gonna give themselves huge stop loss just to make a little bit of money. This is their true risk. And if they're wrong, they might. So basically a negative risk reward ratio looks something like this on paper. So they may win this trade 80% of the time, but the 20% of the time they're wrong, it's just very dangerous. So I guess some people can really lock that in and be really good at it, but high potential for massive blowout with that right there. Yeah, I don't know why you would want to do that. There are more reliable ways to trade that don't require you to take on that kind of yuck. Hey, we're getting some displacement here on pound, so that's nice to see. Gold also giving us some displacement. Doesn't seem very sustainable mathematically speaking. I agree. I agree. It's like using a, well, I don't know. I got to think of a good metaphor here. I'm sure I'll think of one. The first thing that came to my mind was just, you know, you're trying to nail a nail that's like a, a 3-inch nail into a 2x4, and you're going to use a, I don't know, some obscenely massive thing to nail that nail into the 2x4 instead of just using a hammer. You're going to go get a Mack truck, and you're going to take a Mack truck and drive a Mack truck into this nail to get it into the 2x4. That's probably a horrible metaphor. In fact, I know it is. I've seen his stats: 320 trades, 80% accuracy. Also, his splits his trades into about 20 small positions. It's too much work and effort, man. I don't want to knock anybody, man. Like, if he's being successful, that's cool. There's a reason that not everybody's trading that way. There's going to be an exception to every rule, guys. There's going to be an exception to every rule. It's a nice looking potential setup here. We've grabbed liquidity. This move up started. Where did this run on liquidity start? It started on this up close candle right here. So there's your breaker. And now we're getting displacement. So we've run liquidity. We took out sell side, and we've displaced away. So we're going to need at least another 15-minute candle to print to see if we get a fair value gap in here. Gold also, man. I'm kind of upset with gold right now. I'm really thinking about just taking it off of our watch pairs. It's done me dirty. I've lost, like, most of my losses in this challenge have come from gold. So maybe if I just eliminate that pair, I hope you don't take off gold. I'll probably leave it on. I like trading gold. It's just, it had done me dirty. It has not played nice. It really is, man. Beautiful reaction here off of this fair value gap inside that US 30 breaker right there. Really nice reaction. But pound, man, look at that. I like that displacement after grabbing this sell side liquidity here. Again, we're going to need to see this candle closes in about 20 seconds, and then we're going to need to see the next 15-minute candle not take out this buy side liquidity like I did last week. We would want to see the next 15-minute candle maybe pull back a little bit, close bullish, leave a nice little fair value gap, come down, tap in, and then run up into that buy side liquidity up there. So if this 15-minute candle opens and just runs that buy side liquidity, there's no really good setup there. Could you explain pound a bit more? Okay. So what we're looking for is a run on liquidity and then displacement away. So because we're bearish dollar, we're bullish on the pound. So what we want to see are sell side liquidity get run, and then we want to see displacement away after we've had that run. So you had this liquidity here get run. You had this liquidity here get run. So it ran these sell stops here. It grabbed that, and then once it grabbed that, we've had displacement away. So we identify, where did this run on liquidity begin? Well, it began with this up close candle. This up close candle initiated this run on liquidity. So down close, quick down close. When this candle opened, it aggressively moved down. At one time, this bullish candle right here was very pink. Like, it was way down here pink. So we had an aggressive run on these sell stops. And then after we grabbed them, we have displaced away. We've now broken through the high of where that liquidity run started and initiated, which is our breaker block. So this candle here is your breaker. It's up close candle. We've displaced above it, and now we are going to want to see in this next 15 minutes what this candle does. We don't want to see this candle just pull back and close major bearish. We also don't want to see this candle take out buy side liquidity. We want to see this candle leave. I would like to see it pull back a little bit so it's not just a massive fair value gap. That's kind of what I would like to see, is to see it pull back a little bit here, leave a nice little wick, and then close above it. But leave us a nice little fair value gap in here, and then we could use something like this. I would probably do something like this right here. Just go below the breaker. Let's just call it 12 pips. And then we can get our 1 to 2, which is this. We could hit profit before it grabbed that liquidity up there. So that's kind of what my initial thoughts here on GBP. Grabbed 1% on dollar Swiss short. Good job, Cy. EM, let's say I'm taking 10 trades per month with a 50% win rate. How much would you risk per trade on challenges, in your opinion? Well, I'm risking 2%. But again, like I said earlier, you have to know your data. And it doesn't matter what those 10 trades are. You need to know what your last 100 trades are. What is your win rate over your last 100 trades in a live market? And then you can determine what your risk percentage is off of that. And a lot of that's going to come down to what was your maximum losing streak over your last 100 trades. Because that's going to help you understand how many what as you move forward, if you have similar, not the same, but if you have similar results over your next 100 trades, which if your execution remains the same and you're patient and all those things come into play, right? If you have similar results over your next 100 trades, you're going to have a similar maximum losing streak. So you can divide your maximum losing streak up over the drawdown on your challenge account, add a little bit to it so that you don't violate the drawdown if you do in fact have a maximum losing streak. So for me, my maximum losing streak was 4 trades in a row. So I can risk 2% per trade, and I will only be an 8% drawdown if I hit my maximum losing streak. I'll still have another 2% that I can then adjust my risk down to either 1% or 0.75% or 0.5% or whatever before and recover some drawdown before I would go back up to a larger percentage risk. So You need to know what your maximum losing streak is over your last 100 trades. You need to know what your win rate is over your last 100 trades. And all of that is going to that is what you use to determine what risk you should use to pass these challenges. So if you know you have a 50% win rate on your last 100 trades, but you have a maximum losing streak of 6 trades in a row, or even 5 trades in a row, you'll blow your account if you risk 2% per trade. Because if you have a 50% win rate, you could lose the first 5 and then win the last 5. Well, if you lose the first 5 and you risk 2% per trade, you've blown your account. So you need to understand what your maximum losing streak is. The other thing you need to know is how often does that losing streak show up? Like, is it, if you have a maximum losing streak of, like for me, 4, and that shows up like over my last 100 trades, I lose 4 in a row 10 different times, I'm probably going to lower my risk. I don't want to, I don't want to be losing that many trades in a row that frequently. So your maximum losing streak should not be a consistent maximum losing streak, if that makes sense. Like you don't want to lose 4 in a row, win 2, lose 4 in a row, win 2, lose 4 in a row, win 3. You're right. Like you don't want to see that maximum losing streak appearing frequently. Does stops always go below the breaker? I thought they went below the lower fair value gap. Yes. So in this instance, it's below the breaker and the fair value gap. And I typically will use whichever one is lower, John. I'll use either the breaker or the fair value gap as stop placement. Sometimes the fair value gap that's created inside the breaker, the last candle to make that is below the breaker, and then I'll use like if this candle here, this is the first candle of the fair value gap, second candle of the fair value gap, third candle. If this first candle, if the wick of this candle was way down here, then I would have my stop below the candle that created the fair value gap. But in this instance, it's inside the breaker, and so I'm going to put it just below that breaker. So we still got another 6 minutes or so here on this candle. You're going to get an hourly closure here, which could help set up real nice to get a little pullback, get in, and then run up into that. Whichever is lower, correct. That's how I do it. Again, that's just how I do it for this system that I'm using. Other guys might look at that differently. Gold is getting a nice little move up here. So you had this this run on liquidity it started here or here, either one. If you look at the 30-minute or the 1 hour on gold, you're getting a nice little run on liquidity here. These two up close candles would be your breaker, but you're going to need this hourly candle to close up and then the next hourly candle to close up if you're going to use this hourly time frame. If you drop down to the 15, you can see this was your breaker right here. Right here, we ran liquidity, we've displaced through it. So these 3 up close candles on gold would be your breaker block here. And you do have another massive. This is the thing with gold that's been real frustrating, is it just leaves these massive fair value gaps. When it decides to rip, it just rips and it gives you no opportunity to pull back. So that's kind of been frustrating for me with the gold stuff. So I do like the pound setup here. This is really nice. We may be calling out a trade today on the live stream. We'll see though. I would think I do like this. I do like this setup. Run on liquidity. You're getting a nice little pull. Love the displacement here. The one thing I don't like about one thing that I am seeing is that this displacement, you want to see it get back into a discount area, which would mean you would want to see a deeper pullback into that area here. So maybe you just target the bottom of that fair value gap to come back into that area right there. That gets you below the discount area there. What does that get you? Gives you a healthier stop. It does give you an opportunity to run the buy side. I think I like this better. Yep. All right, I think I'm gonna make this call here. Pound dollar. Go over here to my MT4 chart. And my entry. Let me get this set up here for you guys. Give me 1 second, and then I'm gonna. Is that right? No, my entry is 771. That'd be my entry there, and then my stop would be right there, which would put us about right there. Okay. And we're going to do a buy limit. All right. It is set. So here's our trade. Let me call this out. Let me get these numbers put up here. 26774, 26654, and 27024. There we go. Let me copy that image, and I'm going to put this on Twitter real quick. Oh my gosh. Oh yeah, buy limit. It's like, did I click sell? Entry is 1.26774. Stop loss is 1.26654. And TP 1.27024. This is not financial advice. This is me entertaining you with a challenge. All right, so if this thing runs buy side liquidity up here, we'll have to cancel this, but hopefully we can get a pullback down into this area, get a little retrace, and then run this up. I'd like to see it come back down into that breaker before it runs that buy side liquidity. So if I don't care if it hits the TP. If it can hit the TP, that's fine, and then come back down. I just don't want it to clear out all this buy side liquidity up here first. All right, let me get back over here on the stream. You'd like to see me do oil. I have never looked at an oil chart. I've never pulled up an oil chart. I don't even know if we can trade oil on this prop firm. I guess you can. I haven't even looked. I don't know. Maybe I'll pull one up, check it out. Sharp says, I hate gold, have tried to trade gold a bunch, and it does me too dirty more than I've been successful with it. It has done me that way too. You're not the only one. Which software are you using to stream on YouTube? I'm using Streamlabs OBS. You ever trade ES? I don't trade ES. I don't trade futures. I will look at the US 30, which is I'm not sure what is YM. Is that I think YM is the signal for the US 30 futures. Am I right or wrong? I don't know. It's NQ, ES, and I think it's YM. YMS Dow. That's what I thought. I'll look at the ES. Back when ICT did his 2022 YouTube mentorship, of course he used ES, and so I was looking at that a lot and got pretty familiar with it. But it ended up not. I don't know. It didn't click with me. I had better fortune with US 30. I want to, for prop firms, they don't trade futures. I think there's a couple that are, I don't like the futures prop firms that currently exist. Their rules and the parameters that they have for their traders are not as good. They're way more stringent and strict than the prop firms with Forex. There is MyFundedFX, which is a newer, they've been around for about a year now. They're quickly gaining a lot of notoriety. They're doing really well. They're one of the no time limit firms currently in the space, and they're actually starting. So it's MyFundedFX is the name of the prop firm. They're starting a MyFunded Futures. So the CEO has been tweeting about it. It's about to get released. They've been building out the back end. But they're just they're bringing in a lot of other they're gonna get into futures. So there's more regulation on the futures side of it than Forex. I think that's one reason why a lot of Forex firms don't offer it. But I know that there are some that are going to start getting into that. So US 30 is YM. It's the Dow Jones. ES is S&P. NQ is the Nasdaq, and US 30 is the Dow Jones. Regulation is a good thing. I'm not opposed to regulation, but the firms, the prop firms that are doing the business and offering traders these accounts to manage, they they have to have. I think they just have to meet stricter guidelines for that kind of stuff when they start offering the future side of it. The US 30 is not bonds. It's the Dow Jones index, the US 30 index. It's based on the Dow Jones. So uh, it is not the Dow Jones. It is not the Dow Jones, but it is an index based off of the Dow Jones that we can trade inside the forex. So you can also do S&P 500, and you can do NDQ, or it's called different thing on different firms, NAS. So they're not exactly correlated to the specific prices that ES has, or NQ has, or the Dow has, but they are pretty close. The price action looks very, very similar, even though the prices may not be identical that you would find. Correct. All right, we're pulling back into the fair value gap here. So we'll see if we can get our entry here. It would have to come all. It's going to need to completely fill in that fair value gap to get our entry. You can with a prop firm, because the prop firms are often located not in the U.S., and we're not actually trading them. These are all demo accounts. That's how the prop firms get around um, a lot of these regulations, is that we're not actually trading live. We're not in the live market. We're just demo trading, paper trading, and the prop firms can either choose to A, book us, meaning they can copy our trades. They can B, book us, which means they just keep us on demo. They can fade us. They can reverse trade us. They can do whatever they want. We're just a bunch of data. We're just giving them data on what traders are doing, and then the prop firms use that information. They can sell it. They can use it themselves. Um, but that's how we're allowed to take trades on like US 30 or other CFDs um, with the prop firms, because we're not actually. These are all demo accounts. We're not actually in the market. I'm not in the market taking a trade. I'm paper trading. If the prop firm chooses to use my trades as entry criteria, and they copy my trades, then they can do that, but they don't have to, and they're under no obligation to do so. Sululu HD, hello man. I'm just about to start work and thought, why not hop in and say hi? Hope the trading is going well. It's good to have you in here, man. Thanks for stopping by. We have a trade called, but we haven't been triggered in yet. We'll see how it goes. It's tapped into our fair value gap, but did not reach all the way down to our breaker yet. Besides customers who blow their account, prop firms make money lots of different ways. Well, so they're going to make money on the challenge fees. So 90% of the people who take these challenges fail. So all of that money just goes into the prop firm's bank account. A lot of them will use those challenge fees to pay out profitable traders. So, and then on their back end, they have their own master accounts, and what they are truly they are looking for good, consistent, profitable traders. But the first time a trader passes a challenge and becomes funded, they are not, it's called A booking and B booking. A booking is when they allow that trader's trades and positions to move onto their trade copier for their master account. And then within that, they can set up risk parameters that, hey, when a trade comes in from trader Joe, and when Joe sends in an order and he's risking 2%, we have enough data on him that tells us he's consistently profitable. We know what his win rate is because we've seen enough of his trades. And so they can copy that trade either lot for lot. They can 2x it, they can 5x it, they can half it, whatever they want to do with his positions when they come in. They can copy those trades onto their master account for profit, so that if he's making profits, he's paying for himself, basically. They could 2x it, they could 1.5x it, and then not only are they getting a percentage of his, but they're actually making more. But most of the traders, they're probably B-booked, meaning they're not going to live markets. They're not copy trading them. If they are copy trading them, they can reverse trade them. So I can tell you, if firms were reverse trading me when I sucked, I made them rich. I was consistently losing 8 to 10% every time I took a challenge. And if they reverse traded me and they saw me buy a challenge, they were probably licking their lips thinking, oh, heck yeah, here he goes again. He is the best. He can identify the opposite side of a trade like nobody's business. And that was me. So if they just reverse traded me for 2 years, I made a lot of these prop firms a lot of money because they could just take the opposite side, and they could consistently make 8 to 10% off of me. And I would do that. I did that all the time. So if I got lucky and passed and I became funded, they're not copying my trades. They're going to wait until they have enough of a data set on me. The same thing I'm telling you, where you should not be, you should have at least 100 trades of live data to tell you what your risk management strategy should be. It's the same thing that prop firms are doing. They're looking at all of these traders and they're trying to get as much data as they can and statistics as they can to help them build a probabilistic risk management model on different traders as they come in. And so once they have enough data and they're going to be able to know what your win rate is over 100 trades, then they're going to be able to decide whether they want to A book you or B book you as a trader. So they can make money from challenges. They can make money from reverse trading bad traders. And most of these traders are bad traders. So they can reverse trade a lot of these people. And then when they find really good traders, they can copy their trades. They can 2x their lot sizes or 3x their lot sizes, whatever their risk parameters tell them to do. So there's a lot of ways for these prop firms to make money. They should be paying me to reverse my first trade of my trades. That's right. They should be paying me. They should be calling me every day and go, hey, Brad, what are you doing today? We'll pay you $5,000 a month just to tell us what trades you're going to take so we know what to do the opposite of. I am a profit making machine for them. I promise you. Do prop firms ever go? Oh, all the time. Yes, prop firms go out of business. There are so many prop firms out there right now that they are not. You need to do your due diligence if you're going to do business with a prop firm. You need to know how long they've been around. You need to know what their customer support is like. You need to know, are they doing payouts? You need to look at their what kind of community and support group do they have, um, because prop firms are there's more prop firms now than there ever have been, and a lot of them are kind of scammy, where they're taking people's money, they're setting up challenges or whatever. People are getting funded, and then they'll come up with some crazy rule to not pay them out, or they just have horrible risk management on their back end, and they're copy trading the wrong people, and then they blow their accounts and they got to shut down. So yeah, there's been some horror stories of prop firms closing and going out of business. So yes, absolutely. That's why you should not just be locked in with one prop firm. You should get maximum funding and then go do it again and another one, go do it again and another one. You don't know. They could close their doors just because they get tired of doing business. Like, they don't have to stay in business. Um, so anyway, yeah, there's lots of prop firms that have gone out of business. Gold doing its thing like it always does, running away. I really don't want to see the pound take out that buy side liquidity yet. Can you give an example of a good and a bad prop firm? Um, by name, some good prop firms that I would trust right now are, of course, I'm using Bespoke Funding to do this challenge. They're a good, credible firm. My Funded FX is a great firm. The Smart Prop Trader, good firm. These are all no time limit firms, by the way. Um, some of the ones that are bigger and they are moving to no time limit challenges are the Funded Trader, um, FTMO, of course, My Forex Funds. They all have time limit challenges. Some of them are moving to introduce no time limit challenges, like the Funded Trader is introducing a no time limit challenge now, which is great. I'm funded with them currently already. They're a great firm. They pay out. They've already paid out hundreds of millions of dollars to traders. FTMO has paid out hundreds of millions of dollars. My Forex Funds has paid out hundreds of millions of dollars. Like, these firms have a long track record in history, and they've been around a while. They know what they're doing. They obviously have a good business model. Bad prop firms are any of the ones that I didn't mention. I would be careful of. Just And there's others that are in that I didn't include in that, but um, there's some going around on Twitter right now that people are just blowing up because they're scammy. Their websites were just completely ripped and copied from another firm, word for word. They're literally just copy and pasting tweets and social media from other firms. Um, you just got to be careful. You just got to be careful. Metro says don't drop names. They should pay me to drop their name. Maybe one day we'll have a sponsored stream. I'm doing this for free. I'm not charging you guys anything for this. This is all just for my own entertainment and out of the goodness of my heart to help you guys and show you how to do this. Uh, Top Step, yeah, Top Step is a futures. I think Top Step has a forex side too. It's not anywhere near as good as the one that I have, but Top Step Futures is a good futures prop firm. They've been around a while. They're one of the best in the business. Um, if I was a futures trader, I would seriously consider Top Step. Patrick Wieland has a stream. He's a popular futures trader. He uses Top Step, and he's a shill for them. Patrick Wieland is a monster, man. Like that dude is crazy. He's a FOMO farmer. Yeah, a little bit. A little bit. He's an entertainer. He knows how to entertain, and he knows how to draw a crowd, and he knows how to market himself. He knows how to build his brand, and he has a skill that he's using to build his brand with. He's really just a businessman. He's a trader who uses his charisma and personality to build a following and make himself a lot of money. So I don't, and that's not me besmirching him. That's just me telling you he's great at what he does. So good for him, man. He's out there making a crap ton of money. And he's a good trader too. Like he obviously makes money from trading too. So the Howard Stern of online trading, that's not a bad description. That's probably accurate in some ways. But what I was saying was is I'm not asking anybody to pay me money for this. But I will tell you this. Any of the prop firms that I think are good prop firms, if they ever come to me and they're like, hey, we want to sponsor a stream and we'll pay you money to tell your viewers about us, I promise you I'm going to take that money. If it's a firm that I think is a good firm, or it's a product that they offer that I think is a good product and you guys should know about it, I'm not against making money and monetizing this stream. I don't want to make you guys have to pay for it, but if someone else wants to pay for it, then I will definitely take that money. I'm not too prideful. There are good firms out there and they're worth supporting. And there's traders out there that need to know about them. And so I'm more than happy to talk about prop firms if they come in here. Like if Bespoke came in here because I'm doing this and I'm using them to do this, and they come in and they were like, hey, we want to officially sponsor this stream and we'll pay you X amount of dollars per week to put a banner up in the corner that says Bespoke funding. And we're going to give you 10 challenges to give away and whatever. I would seriously consider taking that offer. Because I make money from trading. I don't need you guys to pay me for that. But if I can monetize this stream somehow at some point, I'm going to try to do that. But not from you. We'll let other people do that. Use other people's money. That's the best way. All right, so we got displacement here off of our pound dollar trade that we've called out. It did pull back into our fair value gap at that hourly open at the 9 o'clock hour here. It pulled back in and it respected that fair value gap. It may run this buy side liquidity here and not give us a deeper entry. I would prefer to see it come into this discount area and give us a deeper pullback so we can get a tighter stop and a better risk reward ratio before it runs that buy side liquidity. So we'll see. We do have that news coming out at 10 o'clock. The ISM manufacturing PMI. It is not on my list of untradeable news events. We'll leave this trade on for the manufacturing ISM manufacturing number that comes out. We'll leave that trade on. If it hasn't run buy side before then, which is another 30 minutes, when that news comes out. If we're still here, then I'll let it go. Euro dollar is trying to run out its buy side. Pound is just lagging behind. US 30 gave a nice drop off of that breaker and fair value gap there. I wouldn't have been in this trade. I would have wanted a 50% dig into that breaker if I had called that trade. It would have been something like this. And we wouldn't have gotten triggered because it didn't give us a deep enough pullback. But again, just the power of breakers and the fair value gaps inside of those breakers. I would always prefer to see it take a little bit of a deeper retrace into that, but it didn't. It just came right up into that breaker, tapped right into that fair value gap, and then fell away. And I had said that this would be your next strong liquidity here, and then these areas down there. So we'll see if it wants to go that far. Gold, man. I don't even like looking at the gold chart anymore because every time I do, it just makes me mad. Like, come on, man. Like, just move like everything else. Give normal retraces and pullbacks. Don't just... it's so frustrating to watch. Because you see these big moves and you're like, oh man, this is that pain that I was talking about, that FOMO, that fear of missing out, that fear of not being in and missing out on profits. When you see these big moves like that, you're like, could I have gotten in on that? Where could I have gotten in? How could I have taken advantage of that trade? Look at all those quick profits you could have made. That's where the pain comes in when you look at gold. And you see those just massive sharp moves all over the place. It's so frustrating. This was the trade today, y'all. This right here, right as we got on the stream. We had run liquidity here on euro dollar. We displaced away fair value gap right in the heart of that breaker. Taps right into it. I mean, just an absolutely gorgeous setup. It's unfortunate that it literally was happening as soon as we got on the stream today, because I'm just not going to ever take that. I probably would have had a 7 pip stop. That's about as low as I go. I mean, it's just a beautiful, beautiful setup, and it's still running, and it's gonna run into this buy side liquidity here. This is the London session high here. It's running for that right now. And I just hope pound doesn't take that out yet. Also, what I don't hope is euro taps into that and then just craps the bed again. I don't want to see it do that either, because that would be bad for us. Sean says, of course, why wouldn't you? When I coached, I had an opportunity to go all Under Armour with uniforms and completely jumped at the chance. Yeah, you should, man. I mean, if you're doing something good enough, and you can, you should always be trying to monetize whatever it is that you're doing. You should be doing it well enough that people want to pay you to do that. You should take enough pride in what you're doing that if people want to pay you for what you're doing, you should highly consider it and you shouldn't turn it down. I am no purist. I'm a capitalist. Absolutely a capitalist. And if I can figure out a way to provide value for people who were in my position, but at the same time, figure out a way to monetize that, I definitely am going to. Mario, can show or say what news you trade and what news you don't trade because of volatility. Yeah, so I have a list. I need to go find that list. I don't have it on this machine. So obviously, like non-farm payrolls, anytime Jerome Powell or the Fed news, any type of Federal Reserve news or FOMC type news, I'm not going to trade that. I'm not going to trade interest rate. I'm not going to trade CPI type numbers, any type of CPI type stuff. I will trade like retail numbers. I'll trade this manufacturing numbers, housing numbers. I'll trade consumer confidence numbers all trade. But any type of like employment number, I don't know, in my mind, just larger economic event type drivers where most of the market is really paying attention to it, I will trade. I will not trade. I'll put a list together and I'll put that in the chat sometime this week if you'll remind me about that. Wouldn't you had wanted it to run deeper than what it did? Which one, John? The Euro trade? No. It ran halfway. It ran 50% into the breaker and it cleared out that fair value gap. I would have had my trade at 50% of the breaker, which is at the bottom end of that fair value gap. So actually 50% of the breaker is right about there somewhere. And I would have had a 7 pip stop. That's about as low as I like to go, is 7 pips. I don't like to go much tighter than that. That's as deep as it needs to go. 50%. I like to target that 50% area of the breaker. And I'll use that fair value gap to also kind of look at what could potentially where it might also want to drive into. It just depends on where the fair value gap is, etc. I mean, there's some subjectivity there, but that's just how I kind of 50% of the breaker is where I kind of like to look, which is where it's not quite 50% of the breaker here on this breaker that we've got currently on pound, but it is at the bottom end of that fair value gap range. Because the fair value gap is a little bit above the 50% line, I would target the bottom end of that fair value gap here. That's why I selected that this time on this specific trade setup. I'm going to try and stay on till the news hits at 10 and see what happens. So we'll stay on for another at least 30 minutes here. So a little bit of a longer stream today. Since I won't be on tomorrow, why not stay on a little bit longer today? I did think about making it up and doing a London session. I haven't done a London session in a long time. And I know we got a lot of Asian and UK and African traders here that maybe we'll do a London session, a Venator London session one day, since we're not going to stream tomorrow. Maybe we'll do a London session, and maybe we would do it tomorrow night, like going into Wednesday morning. We could do maybe, I don't know. I'm getting ahead of myself. The London session has been giving a lot of really nice setups. Yeah, I look really dark on that, doesn't I? Does my camera look dark to you guys? Let me see if I can. Hey, that's brighter. If you guys haven't yet, I'd appreciate it if you hit that like button on the stream. Euro about to run out its London session high here. And when it does, I'm going to be really interested to see the reaction off of that. Because that's a pretty quick, aggressive displacement off of these, running these lows here. The dollar still has a little bit of ways to go to reach its overnight low. So, very interesting. Oh, gold has cleared out the buy side liquidity here. Here is your hourly breaker on gold. So there's your breaker box, and whoa. And here is your, as expected, massive gold fair value gap, because that's all it likes to leave behind are massive fair value gaps. So when this hourly candle closes here, you have displacement above, you ran sell side liquidity, you took out an old low, and then you displaced higher. There's your breaker. So if you get a gold pullback, you could be looking at 50% of that breaker and also 50% of the fair value gap. Somewhere right around here, you could look for an entry. And I'd have my stop down here. I'm not calling this trade because I've already called the pound trade, and this is on the hourly time frame as well, so it's going to take longer for this to play out, by the way. But that could be, if you're, for all the gold traders out there, that could be a potential setup. It gives you room into before you get to these highs. If it wants to run those highs, you'll hit profit before then. But if it doesn't want to run those highs, if it just want to reaches back up in there, your take profit is in such a place that it could get tagged before it wants to turn around if it doesn't want to go that high. Of course, it's gold, so it could just do this like it did to us last week and took that loss. So be careful. It's gold. Be nimble. It does not play nicely. It seduces you and tempts you, and then it kills you and takes out your kidney and sells it on the black market. So just be careful. Dollar's starting to pull back, which is could be a good sign for us. Euro left that high in place, so that's kind of nice. If we could get a pullback, maybe maybe the news could pop us down and get your trigger, and then you run into your profit up there. We'll see, but I like the setup. Oh. This is the waiting game. Let's go see what's happening over here on my Twitter here for a second. Creedy left me a message. I don't know if you're still in here or not, but John, I see your message in there. I'll hit you back later. All right, we're just chilling. Pulled back into that fair value gap and has again rejected off of that. It's building up some liquidity here, so potentially maybe with that 10 o'clock news, you run that liquidity and it tags you in, and then it flies up. Alternatively, it could just fly up with the news and take out that buy side liquidity, and if it does that, we'll cancel this order. But we'll find out here in about 20 minutes what it wants to do. I had a question. This is kind of, John, a little bit about what you were asking me in the DM over there. But if I was gonna be trading, move away from trading funded account or my own personal funded account, and I would be thinking about, okay, maybe I should use these prop firms. These prop firms, why would I use them? Well, number one, you can use a small amount of your own personal money to gain access to managing large amounts of money that you probably wouldn't otherwise. There's trade-offs because you do have to accept their risk parameters. You do have to accept their rules and you have to abide by them or you'll breach the account and you won't have access to it anymore. If I was going to move into a funded account or away from my funded account, and let's say I had $1,000 to that I have $1,000 available to me to trade with, and I could either take that $1,000 and I could put it into my own personal funded account with a broker, or I could take that $1,000 and use it to get funding with a prop firm. I would choose the prop firm. It's going to have a much larger return on investment. I don't have to have the pressure of flipping a $1,000 account over and over and over again and doubling my money all the time. But what I would do is I would take my capital, in this instance, this example, let's say I have $1,000. I would take that $1,000 and I would divide it up over 10 challenges. I would give myself 10 challenges. You could do less. Let's say you did 5 challenges, whatever. But let's say you gave yourself 10 opportunities to get funded. Okay. So you have $1,000 that breaks down to $100 per bullet to shoot, per challenge to take. So now you find the prop firm that you want to use. You do all of your background work. You do all your homework. You ask all the questions. You go through the FAQs. You get in their communities, right? You've done all the due diligence that you need to do on what prop firm that you want to use. And when you identify the prop firm you want to use, you have $1,000 that you've divided into 10 different opportunities. So you have $100 to buy a challenge and you have 10 challenges to work with. So you take $100 and you buy whatever account you can. Like Bespoke, you can get a $10,000 account with a discount often, and they're running discounts all the time. For under $100, you can get a $10,000 account. So you get that $10,000 account. Let's say you fail it. Now you're down to $900. You buy another 10K challenge. Let's say you fail that. You've spent $200. You still have $800 left of your trading capital to work with. Let's say on the third time you pass that challenge and you get funded. And then you trade that account like we did and you make 8%. You've made $800. You get 80% profit split. You get a payout of $640 off of that account. You've spent $300 on these challenges. You still have $700 of your initial capital available, and you just got a payout of $640. So you made back all $300 that you've so far invested into that challenge, plus another $340 on top of that. So you have a 30% return on your $1,000 capital that you're trading with. It took you a couple challenges to pass, but you did pass. So it's just a way better return on investment. That's how I would approach prop firms. Is I would figure out what is the capital that I have that I can use towards my funding a broker. $500, $1,000, $5,000, whatever it is. Divide that up over the amount of opportunities that you want to have to pass a challenge. Buy the smallest account or buy the biggest account you can with that smaller divided up number. And then that's how many opportunities you have to use your capital to get funding and get those payouts. And you're going to be getting way larger and more consistent payouts doing it that way than you would trying to over leverage a smaller personal account in the end. It really is the golden age of trading prop firms, man. It really is. It's kind of the gold rush days of the old 49ers, the guys that were rushing around to the gold mines and trying to cash in. This is that for traders right now. We have access to so much capital, and these prop firms are giving us an opportunity to take advantage of that, and we should be taking advantage of that. Again, if we run this buy side, which it looks like we're about to do here on the pound, we're going to need to cancel this order here. That's fine. It did pull back into that fair value gap. It didn't even reach down to the breaker. So that's kind of unfortunate. I would have liked to see that little pullback right there after it broke through. Displacement away, pullback, get in. But if it runs our buy side target here, we will not be able to participate there. Gold marching on like it always does. US 30 giving a nice pullback deep into that fair value gap right now. Interesting there. If it runs this sell side liquidity, you could have a reversal playing out right here on US 30 where you're getting this run on sell side liquidity. And then you're going to, if you continue to get displacement away here, you could have a further reaction to the upside and have a possible run and participate on the buy side there. Got about 13 more minutes here. We'll see what happens with this news and if we end up canceling this trade or not. I guess I've hit my word limit for the day. I'm running out of things to talk about. I haven't seen Jack in here. We could trash soccer. Maybe he'll show up. I haven't seen Jack yet today. At least that I know of. I haven't seen Jack. Michael, you've been quiet too recently, man. What's the weather like over there? Is it still 70 degrees outside? So Euro did tap into its overnight high here and took out the London session high. So that's not, but the dollar did not yet. So I don't know what to think about that. That could be some SMT divergence if the dollar leaves that low in place and then pulls back. Euro took out its overnight high, tapped into that buy side. Everyone's waiting for their entry to get triggered. Yeah, we're all waiting. Weather has been crap recently. Today is 15 Celsius and back and forth between rain and sun, but I like colder weather, so it's good. I like I like colder too. I don't want it to be like frigid cold, but cool. I think so. That looks like what, like about 60 degrees Fahrenheit. That sounds amazing. 60 degrees sounds absolutely amazing. I'll take it because it is way hotter than that here right now. This is interesting. Bespoke put out their stats for June. So let me throw this up here. I'll throw this up here so you can see it. Here's Bespoke funding program June stats of all active accounts in June. 21% passed stage one. So out of 100, let's say 100 traders, 21 of them passed stage one. Only 8% became funded. 8%. So 92% of the people failed to become funded in June. 61% are still trading. So there's a lot of people that are still in their challenges and they have not breached their accounts. And they added $28 million in total. They paid out, Bespoke last month paid out almost $600,000. That's awesome. Good for them. Will we get triggered or not? We will wait and see. We've got about 8 more minutes until news hits. Again, the dollar did not take out its overnight low, and the euro dollar did take out its overnight high. US 30 tapped right into that breaker right there. Hit that 50%, hit 50% of that breaker and hit 50% of that fair value gap. And has rejected off of it nicely. Now it may continue to rip up, but again, guys, this is the power of this setup. It's a very simple setup. It ran liquidity. We displaced away. We had a fair value gap left inside of a breaker. We target about 50% of that. It wicks in and it's fallen away right now. It doesn't work every time, but it works a lot of the time. It works enough that if you do a 1-to-2 risk reward ratio, you're going to win twice as much as you lose, and you're going to win more consistently than not. At least a coin, it's at least a 50% win rate if you execute it right. So, very simple setup, very simple system, very simple strategy. It doesn't need to be complicated. Adama, hey. It is a lot better than a moving average crossover for sure. It absolutely is. Although there are a lot of people that trade moving averages and they make a lot of money. You can execute if you have the data on your trading system and you know how to execute it, use it. Like there's no reason not to. Use it. And my intention here is not to get you to switch strategies as much as it is to show you that a simple strategy, a simple system is just as effective. It does not have to be complicated. In fact, the more complicated you make it, the more likely it won't be profitable. It needs to be simple and needs to be repetitive. You want as few moving parts as you can with it. All right, here we go into, we got about 3 more minutes here. I'm going to take a quick restroom break. I have drunk a lot of water already this morning, and I need to go take a quick potty break. So before the hour rolls over and we get that news, I'm going to step away. I'm going to step away for a minute. Just use the restroom real quick, and I'll be right back. All right, I feel much better. Sitting here doing the pee-pee dance in the chair. New scan potentially triggers in. That's kind of what I'm hoping, is that we get a pop down. We clear out some of this liquidity underneath these lows, rebalance this fair value gap, tap into our breaker, and then we run those highs. The one little thing that's kind of a little cautious to me that I would be I'm just aware of is that euro has already run out those highs. Dollar did not, which means this could be SMT here. And dollar may not want to run those lows. It may just want to turn around and head up higher now. I do like that the pound did not run those highs, and there's relative equal highs up here now still that it left in place. So until it runs those relative equal highs, this trade is still valid. We got about 30 seconds here, and we'll get the news and see what happens. If it pops up and clears out this buy side liquidity on us, I will cancel this trade. So if it takes out these highs here on news, then we'll be done for the day. All right, here we go. Hello, Gap. Yeah, we're going to go ahead and cancel that. Cancel that trade there. Trade has been taken off. Let me screenshot that. Put that on Twitter. Wow. What a gap. That's pretty impressive. Euro gapped up, gold gapped up. That is pretty impressive. It's unfortunate we didn't get our pullback here. And again, just another beautiful. This is how price moves, y'all. Just a good lesson on how price moves. It reaches for liquidity and then it reaches for. So it takes out liquidity on one side. It's going to turn around and look to take out liquidity on the other side. And so we're just trying to identify an entry that helps us after one side of liquidity is grabbed. We're trying to find an entry that helps us get into a move before it takes out the other liquidity on the other side. So, man, these numbers came in lower, just a little bit lower, one number lower. I don't know again what exactly why that's having such a massive impact on such a big gap up, but it is. The price to do business, I guess the price to manufacture things is coming down, which means inflation is coming down, which could be news that interest rates aren't going to get jacked up again. But again, that's just a nice delivery of price here. All right. So, good stream today, guys. 3 hours. It's about all the time I have to give to this. It is a interesting week. So again, no stream tomorrow. I will not be live streaming tomorrow. It is July 4th. It is Independence Day celebrations here in the United States. Bank holiday. It will be very quiet. Not to say that there won't be setups and you can't get a move on a bank holiday, but it's just way less likely for that to happen. So we'll be back on Wednesday morning at 7 a.m. And we'll see what the market gives us. But we did get a nice little setup. It was unfortunate we just didn't get our entry triggered in today. That's just the way it goes. No big deal. It's fine. We're patient. We have no worries about any of this stuff. So I really do appreciate you guys hanging in here and watching today. The stream wouldn't be the stream if you weren't here. So thank you so much. I really do appreciate it. Click that like button for me. That's the only thing I really ask of you. But y'all stay safe, happy hunting, and we will see you Wednesday morning.